to do note number 4 and note number 5 together because they're both to do with building. So new warehouse purchased during the year for 90 plus the VAT of 13.5%. The amount paid was entered in whatever. Okay, so we need to work out what was put into the land and buildings account. Well, it was 90 grand plus 13.5%. So multiply that by 1.135. Okay, so that's the actual amount that went into the land and buildings and the VAT account. Now, so if we subtract from that the 90 grand, then we'll end up with the VAT alone. So 12,150 extra was put in land and buildings. Now just to step back a little bit and just explain. The VAT account is a liability account. In this case, we see VAT is a credit when I go and look at my trial balance. So we're collecting VAT money all the time, and this is why VAT is a liability. We collect money every time we sell goods, and that money is not belonging to us, it's belonging to the taxman, so that's a liability, we owe that to the taxman. But anytime we spend money, where we spend money on VAT, we can claim back that VAT, so we can use that money that we've spent, the VAT that we've paid, when we bought goods or bought buildings in this case, and we can use that to reduce our VAT bill that we owe onto the government. So the VAT in this case was included in land and buildings. We need to take it out. That will reduce the value of land and buildings because the land and buildings figure should be exclusive of VAT. The bank figure will be inclusive of VAT, and then the VAT alone is what goes into the VAT account. Okay. So my land and buildings account, I have 795 in that now. And I'm going to take away from that 12,150. Okay, and that's going to give me the correct figure for my land and buildings. So 795 minus 12,150. My VAT figure. Now VAT currently is a credit of 3,100, so I'm going to reduce that by putting a debit of 12,150. So because the debit, this refund that I'm owed on that VAT is more than the VAT currently was, I'm going to end up with a debit entry in the end in my VAT account, so which means that the VAT is going to become a current asset. Okay, so 3,100 minus 12,150, so 9,050, and that's going to be a current asset. So I'll put that in first. So I'm going to reduce my land and buildings. So the new land and buildings figure is that figure there, and VAT, which should be a liability, now is an asset, so I'll put it in my current assets. And it's 9,050. Okay, so that's note number 4. Should be quite straightforward. Note number 5. So note number 5 is buildings to be depreciated 2% per annum, and then we're going to revalue the buildings. So that means we're going to need to change our land and buildings here. So just in terms of exam technique, what I would advise you do is when we did in note number 4, put that figure for land and buildings in the same way as I've done. And now that we need to change our land and buildings, we're going to put a pen through that and we're going to put the correct figure beside it. It just speeds things up in the exam. So first thing I need to do is I need to do my depreciation. So I'm going to have accumulated depreciation of buildings, or this is going to be land and buildings. We're going to have a depreciation expense. Okay, and then we're going to have a revaluation reserve. Okay. So and I might as well also put in my land and buildings as well. So the land and buildings figure, we're starting off with what I had from the previous one, which is the 782. Accumulated depreciation on land and buildings. Let's have a look and see what we have in our trial balance. So land and buildings cost 795, 770 there, the difference is 25. Okay, so 25 is going to be the figure I'm starting off with in my accumulated depreciation. We're going to add on to that our depreciation expense. So buildings depreciated 2% our cost. Okay, land at cost is 500. Okay, so if I take 500 from 782, that'll give me 282. 282, 850. And we're going to get 2% of that. So that's my depreciation expense. And I'm going to add my depreciation expense to my accumulated depreciation. So that means I end up with a new figure of 30,000, okay, and something, okay. Now my depreciation expense is going to put that in here straight away, and it's an administration expense. Okay, so 5657, there you go. Okay. Now, when I do my revaluation, what I do is I increase the value of land and buildings to the new figure, and I cancel all the depreciation on that date. So I'm going to take out those two. That's going to be taken out of my accumulated depreciation and transferred into my revaluation reserve. So my revaluation reserve is going to have that figure there. Okay, that's the total figure before the revaluation happened. I'm going to cancel all that, so that I'll end up with 0 in my accumulated depreciation account. My land and buildings. So the new figure for my land and buildings is how much? Revalue to 900,000. So my new figure is going to be 900,000. So that means that my evaluation reserve is going to be, it's going to go from 782 up to that. So the total figure there is 16, is that correct? Quickly checking my maths, that doesn't look right to me. So 900,000, no, I'll do that again. So equals 900 minus the figure I already had, so 117150. So those two numbers together are going to be put into my revaluation reserve. So my revaluation reserve now is going to be the 30. That's the cancelled depreciation plus how much I've increased my land and buildings by, so 147. Okay, so my land and buildings now changes from that. It goes up to 900,000. The accumulated depreciation is going to be 0 because I cancelled all of it. And then down in my finance by, I'm going to have revaluation reserve. And the revaluation reserve is going to be those two figures added together, so that's 147,807. So that figure goes in there. So that is all of that complete.